Hey folks, Dan Frio here. The rate update today is January 17th, 2022. Markets are closed, but I want to bring you guys up to date on what happened Friday and what my expectations are for the week. So don't go away. We'll be right back. Okay, so well, happy Monday. The markets are closed, so it's going to be a little bit slow of a day today. We're going to be working on marketing and working with people to get all their conditions cleared. So if we can get you closed this week, kudos to us. So I want also a special thanks out to Christina Smallhorn. She was kind enough to let us on her YouTube live event. Let me show you her information right here. Please check it out. If you go down right here, this is the video or the event that we were involved in right here. You can see that in there. We answered a ton of questions, so thank you so much on that front there. So let's get into the news today. The Federal Reserve is about to see a lot of new faces. Well, why? What's going on with this? Well, the Federal Reserve is in line to get 3 new governors, and those will be appointed by the president. Okay, so basically, you look at it this way. Everybody has their own thoughts on things. So when they put new people in charge, they might think, well, we think inflation is a little too hot. Well, we don't think inflation's too hot, or so forth. So there's going to be a little bit of a change in dynamics here. So we're going to watch those to try to get into their heads to see what they're thinking and what their next steps are going to be. Okay, but remember this context here. And remember that the Fed came out and said, oh, we're going to do all this stuff, and then we're going to start raising rates here later in the year, or maybe even shorter than soon. But let's get into what's going on there. The U.S. mortgage rates surge in response to U.S. inflation figures for December. Okay, we know that. You know that if you watch my channel. But the biggest thing here is rates are moving anyways. Okay, so what's the backdrop on all this stuff? So let me explain it to you real quick. When the Federal Reserve came in and said, we're going to reduce or start tapering, and I'll explain that in a second, and we're going to start maybe QT. So let me put these in context, and I tried to do that on the show this weekend with Christina, and I might have confused a lot of people. So let's just make it quick and easy, okay? Basically, we're looking at mortgage rates, all right? And that's what we focus here on this channel. So what the Fed did a couple years ago, they came in and they did quantitative easing. What does that mean? It's basically they jumped into the market and they started buying mortgage-backed security bonds to stabilize the mortgage markets and to reduce rates, to make it lending a little cheaper for people, okay? So as the demand goes in, the Fed created more demand for the bonds, okay? As the demand increases, okay, so do prices. Okay, so the prices of the mortgage-backed securities went up and the yields or mortgage rates went down. Okay, so that's quantitative easing. Okay, they're buying more bonds to drive down rates. Quantitative tightening is this. Instead of buying the mortgage-backed securities, they're going to sell the mortgage-backed securities they have on their portfolio, thus increasing the supply. All right, so that's going to ultimately drive down the demand. All right, it's going to bring prices down and yields up. Just those fundamentals alone, period, are going to make mortgage rates go up. Okay, that's it. So now we also have the Fed coming in and the president appointing some new Fed chairman or Fed people, and now their thought process might be a little different than the rest. Okay, so, but that being said, when the Fed announced this last week, they didn't do anything. They didn't increase rates. They didn't really do anything yet, but mortgage rates have spiked. So you could see just them coming out and saying, here's things we're going to do, that started adjusting the market. So now the context is maybe the Fed doesn't have to raise rates so quick. Okay, so time's going to tell with that part of it. But let's get into where mortgage rates are. And again, these are where we were at the end of Friday. So new rates aren't going to post till tomorrow. And these aren't my rates. These are the national averages, just so you get a benchmark on where mortgage rates are and where they're going. So let's go across this real quick. I'm not going to spend a lot of time here because you can read it on your own. The 30-year fixed rate right now is trading at a 3.65, up 8 basis points. The 15-year is at 2.9, up 5 basis points. FHA/VA is 3.25, up 5 basis points. Jumbos 3.25, up 2 basis points, and the 5-year ARM is 3.64 at up 4 basis points. Okay, so let's write down below here. You can also see the 52-week averages. So where's the high and lows of the year? And you can see like the FHA right here was 275 a year ago. Now it's 3.65. Okay. So that's almost 100 basis points, almost a 100-point move or 1 full percent move in the market. Okay. That's a pretty substantial move there. You go over to the Govy loans, FHA and VA, we are up 1 full percent. So for all those naysayers out there that are like, you know, you're doom and gloom and all this other stuff, guys, I'm only telling you this because I'm trying to get you ahead of the curve so you know what's going on versus the average person out there. Okay, so let's see where MBS has ended the day. This was catastrophic on Friday. And we're going to see this priced into the market probably, or we will tomorrow when the opening bell comes out. But the MBS ended the day on Friday down 42 basis points. That's a big move, guys. That's a big move. So we'll see how we open tomorrow, and that'll give us a gauge on what's going on for this week. And then the last but not least, we're tracking, we have a new tracking system for you guys to help us get more information and quicker information out to you guys. So this is a subscription that we do. We pay for it. You don't have to pay for it. Just follow my channel. I'm going to give you all the information as it comes out daily, hourly, and even minute. If there's a big alert out there that you need to be aware of, we're going to make sure you know. But with all this being said, is there still opportunities in the market? Well, despite higher mortgage rates, 7 million people can still save money on refinancing. So a lot of people say, Dan, you're this pedal pusher on, you know, refinancing and so forth. Guys, I'm not. I'm just here to give you guys the facts. All this is right on the news. I'm trying to condense it all for you guys to say, here's what's going on. Is the world ending? No, it's not going to end. You know, as rates go up and up and up, are they going to get crazy out of hand? I don't know. But a lot of this is going to come. Just think of it this way. As the economy gets more and more stable, rates are going to go up. So we know they're going to go up. They've gone up in some categories over 1 full percent over the past year. So hopefully we educated you guys on this ride up. But if you haven't taken advantage of a refinance, please let us know. If you're still on the fence of should I buy a house or should I not buy a house, you know, that's part of our educational process here. We're trying to make you guys a better decision maker. So only you can tell on your situation if it's right to buy for you right now. So, but if we can help you during this process, if you're looking to buy, refinance, anything, reverse mortgages, we got a lot of information or a lot of quotes out last week for reverse mortgages, believe it or not. Haven't done one of those in about a year or two, but now all of a sudden those are starting to come back. We have debt servicing for those investors out there that they're like, okay, I can buy a rental property, but my income last year wasn't so good. I got good news for you. As long as the property cash flows, you might be able to buy that thing. So we have those programs and more. So to find out more about how we can help you guys, please check us out. What I ask people to do is call us, okay? It's not high pressure sales. We need to know your unique situation. So how do we do that? Well, if you just apply online, we're still going to call you. I need you to answer the phone. If you can't answer the phone, let's schedule a meeting. So right here, if you check out right at the above, there's 3 ways to basically get started on an application or at least ask questions. You can call us, you can schedule a meeting, or you can apply online. So that's it for today, guys. I'm going to come back with a video later this afternoon on some non-QM programs that we have. If you don't know what I mean by non-QM, I think you're going to be very pleased on some of the programs that are coming out of the woodworks lately. So God bless, guys. Thanks so much for watching. Please don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you later this afternoon. Bye-bye.